Good morning, everyone. Welcome to the Modern Market, where today we discuss all things to do with the various markets, including the crypto market, the NFT market, the metals market, the stock market, the equity perps market, and how to make some or a lot of money, ideally, on the internet. Load up discussions today. We have Hype surging 23% to $27 on the news that HIP3 open interest reaches all-time high of $790 million and daily volume hits 1.5 bill. Big news for Hyperliquid. We'll touch on that. We'll talk Trump increasing tariffs on South Korea to 25%. Well, at least that's what he says. Because Korean legislature... Gosh, what a terrible start to the show. Can't speak today. Korean legislature have not approved the US deal, and Tether is reported to have bought 27 tons of gold worth $4.4 billion. We'll talk about that as well. We also got the latest on price action as always, and our thoughts on the market. Also delighted to say we've got Colada from Phygitals joining the show a little bit later today to have a conversation on the Pokemon market and how they've gone about creating some liquidity in what is traditionally an illiquid market. Very excited to have that conversation about that asset class. So stay tuned for that. I've got Legendary and Rahim in the co-host seats with me today. We're ready to get into it. But just a reminder, friends, before we do, nothing that we say here is financial advice. The market is very, very risky. We do not know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Tuesday. It's the 27th of January. How are you doing?
Jim, doing quite well. I think you lost your voice because you were so excited in the morning screaming when you looked at the Hyperliquid charts. That is the theory that I go with.
I did buy some hype. I did buy some hype in the process of it going up, not low enough. But that's not why. Just choking on some food, unfortunately, which I've just finished eating. But it's a good shout. It's a good shout. I'm sure there's a lot of people excited about hype. Is that why you were you thinking in that direction because that's why you're so excited?
Yeah, I am pretty excited. I told you yesterday on the show that I had this, or I still have this Hyperliquid BTC position that I wanted to readjust that and sell the BTC part out of it. And then I checked the liquidity pool, which I haven't done in a long time. And I realized, doesn't really matter. It's already 97% in Hyperliquid either way, and only 3% of BTC remained. I never rebalanced that. It's just doing its thing because I always said I'm indifferent between the two assets mostly. And I just let it be the way it was. And obviously, now it is a bit more BTC heavy. It DCA'd out on the way up from Hyperliquid into BTC, but I am up a very, very, very beautiful amount on that pool. And it did a healthy amount in additional trading fees yesterday as well. So I am very content with that.
Indeed, that LP position is very, very attractive when you are in it. Watching impermanent loss is always a pain. I think you gotta keep an eye on that, to be honest. But it can be a nice way to print on two assets which you do both like. It's one of the first examples in crypto where you can take Bitcoin, You can get another asset which you also really, really like, and then you print some fees. Just got to watch them permanent loss a little bit. So that's nice. Rahim, what are you making of this hype move? We're going to talk about it more later in the show, but are you exposed? Are you not exposed? What are you thinking of it? How's things going otherwise?
GM, everybody. I'm funny enough, I actually bought some hype just yesterday, so I got like super lucky with timing. But it was also just because I saw such massive red candles, I think, in the last couple of days, especially on hype. And I've just been like really starting a lot of like this like relationship between like open interests and like I've started following some people, so I'm like still on my like learning curve about how there's like so much of like market sentiment is just like observed by like these like on-chain markets, and I feel like that's gonna become like more and more evident. So yeah, I got like super lucky with it, so I'm feeling good. I know like some of the other perp dexes are up a tad bit here and there, but it's looking good.
Okay. Good buy. Very good buy. I bought it a little bit later, but still up on it as well. I just think it's just a great price here still, all things considered. If you think this is now, I mean, you just never know. There are so many sellers that keep coming out of the woodwork for hype for different reasons. But we'll talk about that more in a little bit. That'll be a good one to talk about. It's definitely the thing to talk about today, with it being up 23%. Rahim, just checking in with you. Otherwise, how have you been navigating the market in the meantime? You've obviously been quite good at trading on the more speculative side for quite some time. There have been a few runners as well. There was Penguin over the weekend. There was some other stuff that was really moving. Have you been getting exposed? What are you making of the market at the moment?
So it's been a while since I've done like this degen trading. I did like trade like some of these like meme coins, but my god, they're like super volatile. So like I exited. Like I feel like I've come to that point where I'm not looking for like big exits and stuff. And some of them I obviously missed the big upside, but seeing how they crashed like later on, it's been brutal. But like pretty happy with that. I think lately I've just been like so much more busy with like IRL stuff, that funny enough, I feel like I'm not like super compelled to be like trading a lot. But man, like last night I was just like sitting and thinking, like there's just like something in me that just feels like you look at how like volume is moving between like silver and gold. I was speaking to my uncle who's like a big precious metal holder for a very long time, and he was just saying that like he sold a stack, and he's like I was telling him about like how like crypto has obviously underperformed, and he's not much in crypto. He's like it's bound to go up. He's like there's no way these like markets like make sense for precious metals, as someone who's held it for like decades. And he's like there is no way that like capital doesn't flow into, he knows very little about like Bitcoin and a couple of XRP and a couple of things, but and it was very interesting to see someone from his stance being like, you know what, if you're saying crypto is the only asset that has underperformed, it's pretty logical for capital to move there. And I was like, interesting.
Hmm.
One note on that I wanted to add with the volatility that we're seeing in the gold and silver markets. Let me get this tab open here. Kobasi Letter had this post yesterday saying there was a dip yesterday in the gold and silver markets. In gold and silver erased $1.7 trillion of market cap in 90 minutes, one of the largest reversals in history. And just to put it in perspective, 1.7 trillion is also exactly the market cap of Bitcoin. So basically, 90 minutes, gold and silver together moved down the entire market cap of BTC, which is crazy to think about the dimension of these moves.
It's pretty wild, but then at the same time, it bounced back, right? Like it moved down that amount and then bounced back a very significant amount as well straight after that. So yes, the volatility is there to some degree. Okay, interesting stuff. Well, we're going to talk more about those things in a little bit. We're going to talk hype more and get into that. We're going to talk the rest of the price action. But let's get you up to speed with everything else you need to know from around the markets from the past 24 hours. We have Bitcoin flat at 87.8K, down 3% on the week. We've got ETH at 2.9K, down pretty much flat, also down 6% on the week. BNB is flat at 879. XRP is flat at 189. Sol's up a percent to 123. We have, and as you said, Hyperliquid up big mover, up 24% to 2770. Whereas Sui is flat at 144. Those are two major alt L1s. In other news, on the meme coin side of things, Doge is up 1% to 12 cents. Pepe's up 1%. Pump is up 24% as well. Big mover on the pump fund side, back to 3.1 bill FDV, up 20% on the week. Pengu's flat. SPX is flat. The rest of the stuff hasn't really moved a great deal, to be honest. Rect is up 6%. You might have seen the Rect drinks collaboration with X Games sold out in, I think, 60 seconds yesterday as well. Big shout out to Ovi and the team at Rect for crushing another drinks drop. Getting into the headlines themselves and the other news from around the space. Yes, we'll be talking about Hype. I've mentioned that already. HIP3 open interest reached an all-time high of $790 million. Daily volume hit 1.5 bill. Really putting up huge numbers at the moment. Trump increases tariffs on South Korea to 25% because Korean legislature has not approved the US deal. We'll touch on that message, although I guess some of the force of these messages are losing their sting, as it's kind of just the same story being retold over and over. And then finally, Tether reported to have bought 27 tons of gold worth $4.4 billion through Q4 and now own, well, I think they already owned more than 50% of the tokenized gold market. But the big news was that how much more gold they were adding to their balance sheet versus other people. Some notable other price action. River, which was up a huge percentage not long ago, back up to $80, is down 30% on the day to 59. Asta and Lighter have moved up in conjunction with Hype's big move, although to a less extent. So Asta's up 6%, Lighter's up 12%. White Whale is back up 34% to a 65 mil FDV, and Kinetic as, I guess, a secondary play to Hype, up 28% to 267 mil FDV. Congrats to Kinetic holders. If you sold through that brutal drop after the airdrop, you would now be up, I think, around 50% from where it came out. That's good for the Kinetic team. Sailor Strategy bought another $257 million worth of Bitcoin. Tom Lee's Bitminer purchased more ETH2, approximately $117 million. Zama announced $118 million committed for the first encrypted ICO on Ethereum. Binance is getting into this equity game as well, announcing Tesla futures trading. Bitwise launched their first on-chain vault strategies, targeting 6%. BitGo drops from $18 IPO price, going as low as $14. And as I said, Rec Drink's collaboration drink with X Games sold out in 60 seconds. That is the news to get you up to speed with everything that you need to know. Before we get into the main headlines, guys, what is catching your attention? Anything of note? Let's go to you first, Legendary, then we'll go to Rahim, then I've got something to share as well.
Not so much on the Roundup side of things, to be honest, is what is exciting me today. What I looked into is this post here. And it is this prediction arena. The prediction arena is basically an AI trading tournament where different LLMs get a budget of 10K and they are trading with that. It's not the first season of this. It has been run in the past. And back in the past, in season 1, the Chinese models were dominating, mostly because they just made fewer trades during the day that season 1 was running. They were more disciplined. And GPT and Claude, the quote-unquote US models, had this tendency to overtrade. But now in this season 2, there's actually a stronger gap, and Grok is the model that is winning, that is outstanding. Basically, it's also the only model that has managed to generate a positive P&L from the 10K that it started with. It's up 10%. I found this interesting just as the extension of me running my own bot and doing some autonomous trading, not so much with the expectation that this bot is going to deliver an outstanding performance or even generate returns, but more to kind of get a feeling of how is a bot autonomously at this stage of development thinking about trading, how they're approaching it, that. And it was also interesting to see that there is obviously a broader competition going on as well, which is benchmarking these different LLMs against another.
Very, very interesting. Do you think, because when you were telling us about this the other day after the show, I think it was, my reaction in general was, maybe this is very easy to do at the moment, to point out the to criticize it to some degree, because it was like, it sounds like you're talking to a kid and the kid doesn't really know what they're doing. You've given it some money to go trade, and you ask it questions. Why did you spend the money in that way? Why didn't you turn the leverage down? They're like, oops, sorry, I forgot. Even though you put in the rules, I didn't read it. It's like very childlike. Do you think that's a fair assessment? And when you're doing this stuff, are you saying that it's purely for experimentation purposes, not with the sincere attempt yet to expect it to make money? Is that fair? You're on mute. You're on mute.
Sorry, that is super fair, and I think it's extremely, extremely educational for the reason that I can in my bot switch very, very quickly between models. One command, I have Gemini in there, I have all the Anthropic models, I have Codex in there, I have a local LLM in there, I have Minimax, I have Quen, I have some more models in there. So I can basically like switch through models and see how they're dealing with that, then actually get a feeling of how different models working with the same task. And this, what you call childlike behavior of Opus being like, oops, I forgot that there's a trading rule that says I can only trade with 3x leverage, and hence I went 20x long on silver because I did not read the rules pre-trade. But it's extremely good and creative at like understanding the context of the market, of what's going on, and making sense of that and having a trade idea. Whereas Codex, which is OpenAI's coding agent, is not creative at all, but it's extremely good at following the rules. Like Codex is so anal about following the rules that even if you're vibe coding, it's now if you look on Reddit or on other like vibe coding discussion, the consensus opinion is if you want to have a review of your plans that Claude is coming up with, or if you're like code base, go to Codex because this thing follows the rules to the dot. And I feel like this is super interesting in this like real life environment of having about trading to see what different tasks of this whole trading setup can be given to different LLMs, and kind of also learn to experience the differences in the models and what they're good at and what they're not good at. Because I don't think that we are at a point where you can be like, okay, this is one LLM, this does everything. Like this is my general purpose model. Obviously, like for most of the users, it's perfectly fine. It will be more than sufficient to run all of your stuff through Gemini GPT or Anthropic. But if you work on more like refined, niche, automated things, you will very soon learn to appreciate that there's different models for different things and they have different weaknesses and strengths.
Makes sense. So still a learning process, I think. Okay, that makes sense. Raheem, do you have any commentary on this stuff? Is anything else catching your attention from around the market? Where do you want to go?
Your analogy is really hilarious because it looks like Legendary just has like a bunch of kids. Some of them are more delinquent. Some of them are older. Some of them are younger. Some of them are like they understand the rules, but they're very risk free. Like it's hilarious to use that analogy and think of like, oh, now you have like these 5 kids out, and one of them will do better, and like the rest of them will just like figure their way out in life. So it's like a hilarious analogy to look at. Other than that, I think the other thing that's interesting in the market right now, obviously, we have, like you mentioned at the start of the show, the Phygitals founder coming today. But I was looking at so we have the Logan Paul auction happening at the moment, correct? Essentially, yesterday, the auction, or like 2 days ago, the auction for the separate packs, which Logan Paul is also auctioning, which he'll be opening them up after the main auction, where there's an IRL event around it, ended up selling for 3x the amount that the last booster box sold. So back in 21, there was an auction by PWCC where the last booster box was sold about $432,000. And the box yesterday, like if you're accounting for individual packs, which has got sold, it sold for about $1.4 million. Ever since then, the prediction market we have, as you guys can see on the screen, the numbers for, if you go and look at the Charizard, the first edition Charizard that is up for sale, the odds ended up going up for so if on like Polymarket, the odds for it selling for about $1 million went up. I just think like the whole market is going to be very like interesting to keep an eye out. There is, so at the moment you have a bid of $470,000, which has a buyer's premium, so it puts it around 570K. There's one listing on eBay for around $750,000. personally, I think that's going to be the secret sauce. And like, if anyone's like looking into this market, keep an eye on that, because I presume if this bid gets closer to that price, I think that gets swooped up, or that would be basically like the benchmark of how much this gets sold for. Just super interesting to see, after those individual packs sold, the odds for this card selling for more than $1 million went up. And I just think it's such an interesting prediction market. Of course, there's the nuance of all the packs that are being opened by Logan Paul, they're going to have that label, which is that it's opened by Logan Paul. So it's called like the Logan Paul break, I believe. And there's always obviously like speculation that PSA is going to rate them higher, because like, it's Logan Paul and it's like a big public statement. So maybe that's why the packs got sold for 3x the market price. But super interesting to keep an eye out, to be honest.
Yeah,
I like it.
super helpful context, because PSA is typically not the company to rate the most errors, the most like more specific sub things happening with Pokemon cards, and just the fact that they put the Logan Paul break on the grading part of the card is definitely also helping pump the card in value. So absolutely agree that the Charizards are going up in price, and DCF God, who bought his one via our partners at BZ for, what was it, $250,000, is definitely up on his purchase quite a lot. But the Logan Paul break is also adding a premium to the card. So very helpful that you pointed that out as well.
And there is a lot of drama around it. So the other card, which is selling, which has a bid for 5.7 million, which is the Pikachu Illustrator card, which is like the most rare card in the world. So to my knowledge, I think there are about less than 100 PSA 9, but there's only one PN, which is this one. But there is a lot of speculation, and there's like a lot of controversy around that. If you look at the high resolution picture of this like card, you can easily tell that this shouldn't be a PSA 10, because it has very visible damage. It only ended up getting a 10 because Logan Paul owns it. So there's like a lot of like drama around this that already exists. A lot of core people in the Pokemon community hate this card for the reason, other than the fact that obviously like Logan Paul is like a very controversial figure, but they all say that like PSA kind of ended up bending their rules, which is why I think this whole idea of like people buying those individual auction packs for almost 3x the price that they are currently marketed at is, I think there are people speculating that because Logan Paul is ripping them, that there's a higher chance of them getting PSA 10 than if they were ripping them by themselves. So interesting. Overall, an interesting market. I know we discussed this in the Modern Market chat a couple of weeks ago, which is like especially the Charizard, which is something I've been eyeing. But a super interesting auction to keep an eye out for, to be honest.
I like it, man. And to be fair, this is one of the bull cases for prediction markets where I think you made this call weeks ago in the chat, like because you have this nuanced knowledge of the Pokemon card market and actually deeper knowledge on these specific cards, you had a good inkling that those numbers were going to go higher. And so you put on the bet for, what was it? The Charizard, right?
Yeah, it was
higher.
Charizard.
And I guess you're up on that 2x now?
Yeah, way more than 2x.
Way more than 2x. So just by doing the prediction market. So you don't need any like real exposure to the card. You can bet on the card moving up and get your 2x. So that's pretty cool.
The thing with this is, and just to give people like a nuance of how like some of these markets sometimes work. So initially, this did not have like markets for 1 million, 1.1, 1.2, as you guys can see on the screen if you're watching it live. So essentially, the moment it had bids for over like 470, that's when Polymarket essentially ended up adding more options for you to like trade. Usually, when you keep an eye out, those odds change. There's a good chance that, okay, if let's say this card ends up hitting $1 million, so keep in mind there are still 27, 28 days for the auction. So there's a good chance if this ends up hitting $1 million, let's say, just for example's sake, in the next week, that Polymarket might end up adding bids for higher than 1.4 million. It could be till 2.5. And I think it's always interesting to keep an eye on that, because I think some of the odds that I got like lucky with was the $1 million and the $1.1 million.
Nice. Very, very nice. I like that bet. Very good. Well, we'll keep an eye on it. And Legendary, maybe when Colada from Phygitals joins later in the show, we should figure out a question to ask him about this. I think it'd be pretty good to get his perspective too. Right. Conscious of time. So let's get into the main headlines. We do have the conversation with Colada coming up as well to talk Pokemon markets and how they've gone about building liquidity for a traditionally illiquid market. So excited to have that conversation in a moment. Great to have that context from Rahim today as well in advance of that. But let's get to the hype. That's the main headline for the day. Legendary talk.
Absolutely. So what has happened is that Jeff, one of the founders of Hyperliquid, made this post, which I'm sharing on screen, saying that Hyperliquid has quietly achieved an important milestone of becoming the most liquid venue for crypto price discovery in the world. He did attach a side-by-side comparison of Hyperliquid's perps order book on the left, Binance being on the left and Hyperliquid being on the right side of things, and it does show that for all the different order prices, there's just a deeper order book, deeper liquidity on Hyperliquid than there is on Binance Perps. And adding to that, HIP3, which is that part of Hyperliquid that also allows you to trade tokenized stocks, allows you to trade commodities, is also hitting the open interest in HIP3 assets is also hitting an all-time high of $790 million. That is mostly to do with the recent price explosion in gold, in silver, with the market absolutely loving these assets and a good amount of trading interest for gold and silver also flowing into crypto. Just to put these numbers into perspective, open interest a month ago was at 260 mil. Now it is at 790 mil. So that puts it at a beautiful 3x there. For me, this is something that we've been discussing on the show. We often pulled up Trade XYZ, looked at open interest for Nvidia, for Tesla, for the popular stocks, for the indices, most notably the XYZ 100 index that they also have. And we did see that volume climb, and we also did see it climb more rapidly than I initially expected to do. But what really, really helped pushing it is this explosion in gold and silver and the whole market hype around it. What it personally means for me and for my portfolio is that I expect to see more and more assets being added, and we have seen that that copper is now available on Felix, which you can also trade via HIP3, obviously. That I think Ostium was the one to add uranium. So all the more popular things that some of them are not as easy to trade. It's not probably as easy to get uranium exposure as it is to get for some of the other commodities via ETFs. Are coming on chain, are available 24/7. It is more accessible, more easy to trade them, and that makes it super, super interesting for my own portfolio as well. For gold, I will still keep the stance that I buy physical gold and vault that outside of my house, just because it is very advantageous for tax reasons. But obviously, for uranium, I'm not going to buy spot uranium and figure out a way where to hoard that. And by being able to trade it on chain and keep it on chain, and not having any tax difference, I very, very strongly prefer to trade assets like that on chain, because this is where I natively live, so to speak. And I think what's also becoming more interesting is with this competition between all the trading venues, and obviously Hyperliquid is leading with liquidity, but still within HIP3, you have more than one way to trade gold. You have more than one way to trade silver. And it's not as straightforward to find the best market or sub-market for each individual asset. So there will be a time for an aggregation layer, which will help to make that more accessible and solve that. But also, as there is more friction at the moment, I also think that something you've been saying, be something we've all been saying on the show. When there's more friction, there's also more opportunity. So very, very convinced to spend more time in these equity perps to trade and learn more.
Indeed, a lot of good points there. I think my thinking at the moment is that Hyperliquid was, remember when Hyperliquid was like $40, we would say, okay, it's kind of stuck around $40 for a long time. It refused to go up. It wasn't, dip around into the 30s. And when you had been holding it from so much lower, I concluded like, this is the fair price. And this is when people were talking about HIP3. Like, look, guys, people were trying to convince you HIP3 is coming. Hyperliquid is going to be so valuable. It's going to do all this stuff. It's going to have all these assets come. But I think the market didn't, the market did know it, that it was coming, but it needed to see it. I think back then you can't just sell the dream, especially in crypto, you can't just sell the dream. When you're talking about all assets coming on chain, I don't think people would necessarily have known or felt when people just said those words back when Hyperliquid was at 40 and thought, oh, when silver runs or when gold runs, like there's going to be just this complete cascading of volume into this protocol, and so much volume is going to trade in this specific place for that specific market. I think it needed to happen for people to see, like, hang on a minute, crypto itself is kind of static. All these other assets that were not traditionally crypto are being traded on chain in front of your eyes. Humongous volume is being pushed. Price action is pretty crazy, and Hyperliquid is dealing with it all. It's all getting dealt with. People needed to see that happen one time for it to reprove that, okay, this market, which people traditionally thought was just, okay, this is a great DEX to buy spot crypto assets and use leverage within crypto. Now you can expand the horizon and say, no, this is actually worth much more than what we had initially thought, because we're actually seeing it happen in practice. And you've got this explosion of all these different teams that have been building in that HIP3 space, giving, really competing against each other to make sure or to see who's got the best offering. So I'm with you there. I think this is validation for the Hyperliquid thesis if there was anyone doubting it. And I would expect to trade higher from here in the future. I don't know. I don't know whether Hyperliquid will keep getting dragged by Bitcoin if Bitcoin refuses to play. Like, it's not obvious to me that Bitcoin necessarily has to move up from here either. Bitcoin leads typically. And if Bitcoin goes lower, maybe that will put, just keep a lid on Hyperliquid, even if it wants to go higher. So I'm not 100% sure about that, but I think that those like low 20s levels seems to be an area which you can kind of be comfy buying and holding even now, frankly. That would be my view. Rahim, what's your take here on Hyperliquid's big move?
I mean, I'm pretty much aligned with like everything the two of you like said. It's just like I feel like all of this imposes like such a bigger conversation about a lot of these like altcoins and projections. Like Binance is obviously like doing like this, like they're focusing on like trading stocks on their platform, and they're focusing like you can trade gold and silver on their platform as well. And I feel like it's so funny that on one end we are doing this, and on the other end there are founders who are building these Web3 ecosystems who are still waiting for that Binance listing or this exchange listing, whereas the people on the other end of exchanges who would be the people like likely trading, buying or selling these like tokens, now they're put into like this conundrum where, oh, do you buy and sell these tech stocks, whether it's on chain or off chain, or you start looking at these like altcoin ecosystems. Like, it's just like so fascinating of how you have this dichotomy going where there are still projects out there, as probably we are talking about, still waiting for like that Binance listing, whereas the marginal trader on Binance or Hyperliquid is like, oh, like maybe I can start trading things that are a lot more like aligned with regulation, that are financial reporting. I can actually understand it, kind of see the use case, rather than just like some weird back-end shady things that ends up happening with a lot of these like ICOs or like token trading and stuff. So it's just like so fascinating to see those two different worlds collide.
That's a reasonable point. Reasonable point. Funky, want to bring you into this conversation. What's your view here on Hyperliquid and its big move up now?
GM guys, yeah, I think you brought up some great points. I just wanted to call out a couple things. The price action probably is a 1-2 punch. Not only do we have that perfectly timed tweet from Jeff about sort of the OI and the insane levels that it's reached, but if you didn't see the article from Ericonomic, basically it also coincided with the ending of the TWAP from the Tornado Cash entity that's been dumping for months. So I think the fact that, to your point, B, it was able to maintain these low $20 levels in the face of unrelenting sell pressure shows the insane demand for hype. The article goes on to get into some great detail about how the team is not really selling much of it. It's doing so via OTC, if it's selling anything at all. The Tornado Cash entity selling, and just effectively showing how much per the DAT is just buying this up at insane levels. So I think we're only going to see, regardless of what Bitcoin does, I think it's going to continue to, even if it's slowly, march higher from here. I think Hyperliquid is here to stay. This is something that you really should be paying attention to. I've been sitting in my LPs for months. I have never taken them out because, much like Legendary was saying, to hold BTC or Hype, I'm happy to have it spill either way, and it's fine. But yeah, it's incredible to see what this is doing, and I think it's going to be a heck of a year and beyond for Hyperliquid.
Can't disagree with that, to be honest. And yeah, as you said, there were some interesting points made in that article. Not only the selling from external entities that appears to have potentially stopped now, also maybe forecasting the team selling, maybe forecasted to be higher than it was. I think a lot of that was sold OTC to Per, for example. And so maybe not as much perceived selling as people thought there was going to be. So excellent points. Hyperliquid obviously on the move. Big move for Hyperliquid. Okay, good stuff. And I guess underscoring that whole segment, incredibly bullish on this perp equity perps and just stocks on chain. Like I've said it, I think that's going to be incredibly important vertical for the industry over the next year. So let's see how that progresses. Second headline. This is just a quick one for me before we hear from Rahim on the gold side, but it's just a quick one on the political stuff. We're just checking in on it. I feel like it's decreasing in relevance over time as the market gets increasingly accustomed to Trump going off and accusing different people and threatening people with different things. So this is the news that yesterday he said that South Korea is not living up to their side of their trade deal. Until they do, I'm increasing tariffs on automobiles, pharma, and lumber from 15% to 25%. I get the sense now, this is purely instinctive on this one, that it's not, the market is not going to respond as much to each individual moment. So rather than speak about South Korea specifically, I'm speaking more holistically here. I do think some of his words against Canada had some impact, but I do think there is an increasing. The big takeaway for me from the World Economic Forum and watching some European response to that, both on the positive and the negative. We shared on the show the German Chancellor, I think it was the German Chancellor or the Finance Minister, saying how Europe is the world champion of overregulation and that we need to be more in charge of our own stuff, and we need to get our act together, in essence. So that might in some ways sound like kind of on board with the American message, which is that we want Europe to prosper, but it still leads to the same net outcome than what maybe some of the other Europeans might have experienced, which is said whose reaction was more, how can Trump be saying these things? He's said some very distasteful things, for example, which I was hearing in the UK press did not go down well, regarding the war and how it was perceived by Trump, at least, that when they have asked, when America has asked Europe to do anything, like we've never really asked them to do anything, they've never done anything. That was kind of rebutted in our media by saying Article 5 was only invoked once post 9/11, and all of Europe kind of did come to their aid. They lost lives in that process, so that did not go down very well. But even in that scenario where we are reacting more negatively to these types of threats and comments, I think the net answer is still the same, which is people are realizing they're going to need to be more independent. They're going to need to be less reliant. They're going to need to figure out ways to stimulate their own economies, be more resource independent, and sort out their energy situation, which is pretty awful in Europe at the moment. So I think that's just where I wanted to leave that part, because I didn't want to go into South Korea in detail. I think this behavior is going to continue, and we'll just monitor the situation and keep on top of it. Because remember, when Ray Dalio shared his article highlighting, although US equities might be up, it turned out that they underperformed European equities by a great deal. And that is something I would keep an eye on, especially as Europe needs to move away and focus on themselves. So I think European equities are probably quite attractive for that reason. So those are my thoughts there. Guys, that's my headline. I'm conscious of time, so Unless anyone has any thoughts, let's get the final headline from Rahim. Let's do it.
Awesome. So as we know, gold prices are absolutely surging. We are sitting at $5,086 per ounce. In regards to this, there was a report that came out with obviously the amount of gold that Tether is stacking. They ended up stacking about 27 metric tons of physical gold. This is just in Q4, and they did similar about 25, 26 tons in Q3 of 2025. Obviously a massive purchase. A nuance to keep in mind is that they buy it for obviously like their reserves, but also for backing their Tether Gold stablecoin ecosystem. And as we know, their biggest business model obviously is holding on to US treasuries. So that gold, even with them buying tons and tons of gold, only makes up 7% of their reserves. Pretty interesting to see that. There was a lot of conversation on the timeline about the fact that about 50% of on-chain gold, which is backed by like 1:1 like stablecoins, is actually controlled by Tether. A very fascinating idea to like keep in mind. There are about 530,000 tokens that are out there. So like there's a similar amount of like troy ounces. So that puts it about like maybe like 15 tons of gold that is available on chain for people to trade. Super fascinating in my opinion. I think there's a lot of conversation that we saw on the timeline yesterday, which was about a couple of things. People realizing that selling physical gold or physical silver for that matter is actually a lot more hard. Like, you go places, you have to give in like your physical gold, you have to KYC, you have to give information. I feel like there's a lot of conversation had about how liquid all of like traditionally illiquid assets become. You are trading them on chain. Obviously Tether absolutely killing it on that side of things. There was also an article that was posted by the Kubesi letter, which was essentially talking about how China has been acquiring tons of gold, no pun intended, on the back end, to the point with whatever they're reporting, they're buying 10x that amount. This is very interesting because this has happened on a couple of instances, as you guys can see on the screen, in November, September, even back in December. We've seen that whatever that is being reported, they end up buying like 10 to 15x more, which kind of speaks volume to why like gold is surging. And I'm sure a lot of countries are doing similarly. A lot of people on the timeline, I saw this particular take where there is something to be said about like gold and silver is like surging even though there are no DATs buying it. But that's kind of like this exact post kind of nullifies that when you have entire countries stacking gold. Definitely an interesting metric to keep, obviously, because none of this is bought on chain, right? So we don't come across this information, and I assume over the time we hear more and more countries buying gold on the back end that just like doesn't get reported, and we find out over time. But super fascinating to see that Tether Gold obviously stacking about 50% of the on-chain gold that's traded in our space.
Love it. Really helpful summary there, Rahim. As you said, I think Matt Hoogan tweeted yesterday saying, CIO a Bitwise, that Tether bought more gold than any central bank in Q3. That's what we do know, according to official data, and it's going to be close in Q4. So I think that's in relation to these numbers that are coming out in the last 24 hours. But the company will be top 3. And his question at the top of it was asking, who's the central bank now? Because if Tether's basically buying more than anyone all the time. And so there's obviously not only a transfer of gold, a significant transfer of power to Tether, or there has been this transfer of power over a long period of time now. Interesting point on the liquidity point, though, because that's what we were saying on the show. I don't think people have quite clocked recently that people say it's super hard to sell this stuff IRL. It's not hard to sell it on chain. If you have Tether Gold, it's super liquid. It tracks the normal price, and you can sell it at the price that it's trading at anytime, anywhere. So it is, to me, it's starting to become, okay, now obviously maybe you want to diversify, maybe there are reasons why you want to hold physical, maybe tax reasons, maybe other types of reasons, safety reason, whatever they may be. But if you're talking about pure liquidity, being able to exit, get the price without having to eat some significant discount, your on-chain version is actually pretty fantastic. So that's our view there. Ledge, any final takes here before we get into our interview for today? Excited to be talking to Jake from Phygitals in just a moment. What's your final take here?
Nothing to add here. It's just incredible to think about how profitable Tether is as a company, that they can buy this incredible amount of gold and get into all the other businesses which you've been speaking about, whether it's energy, agriculture, and all the other things they're extending into. It's fascinating. It's fascinating to watch that. But that is everything I have to say on that for the moment.
Okay, sounds good. Right, super excited to get into our interview now. Thanks for joining us today, Ryan. We'll circle you out here. See you on the next one. Delighted to welcome to the show today Jake from Phygitals. Like us in many ways, built by someone who saw an opportunity to bridge two worlds and actually build something people use. Taking the concept from a Solana hackathon in 2023 to over $66 million spent on their platform. Of course, we're talking about Phygitals, which is positioning for what could be the biggest year in Pokemon history with the 30th anniversary. We'll also talk about how they're building liquidity in a traditionally illiquid market and why tokenized trading cards might be having their poly market moment. So, Jake, welcome to the show with us today. First time to have you with us. Great to have you with us. How are you doing?
Hey guys, good. Thank you so much for having me. It's a pleasure to be here, and it's been a very interesting listen. So yeah, I mean, it seems like we're already on the forefront of all the started days. So yeah, excited to talk.
It was interesting. We were just, talking about the gold segment and the points that Rahim was just making before, and where we've been talking on the show recently, that some of these physical items that are very expensive, gold being one of them. I think one of the cases has always been, well, you want to hold it in your physical possession because you care about it so much. But equally, there's this just humongous issue of security, custody. What are you going to do with it realistically when you want to have a lot of them? I guess this is probably core to your business as well, right? Where you are custodying these very, very valuable cards. Just talk us through why you thought Phygitals super important to build.
Yeah, that's a good point. I mean, gold's more interesting, I think, in the sense that it's not sentimental like a trading card, perhaps, which makes it probably a really good use case for tokenized RWA. For trading cards, the origin idea was to tokenize figurines like way back when, probably a few years ago, and yeah, that was kind of the original concept. I'm one of the co-founders, and then I got into talks with custody partners like Brinks and etc., and quickly realized the storage costs, if they weren't transacted enough on chain, would not really cover all of the costs associated with storing larger objects, which kind of led to trading cards. And one of the first things that we kind of talked about when I started putting a team together was like, how do we make people okay with like parting ways with like the physical custody, especially because I mean with trading cards, I mean people, they take them out, they look at them, it's more like an art piece. So the first thing we ever did that we started building out in our platform that we didn't really see exist anywhere at the time was a social platform. We wanted to be originally kind of like the Facebook for collectibles, where we kind of modernize like the forums and social aspect of it, because our thesis back then was if we make the digital ownership more gamified and better than the physical ownership, then people might be more incentivized to kind of send in cards, tokenize them, have like a way to digitally flex them, and kind of that whole take. But yeah, I mean, with gold, it's like I don't own physical gold, so I don't know how much I can speak on this. But like, I don't know if people are taking it out of the briefcase and admiring it. With trading cards, like it's a big deal if someone wants to send their cards to a vault and have it like a digital custody version of it. So yeah, I'll stop there.
Very, very interesting. So what made you think, so I wasn't aware before that you had this social media idea, probably because there's a greater attachment to the cards. How did the idea evolve then away from that into what Phygitals is now?
Well, back then, so we started with about $4,000 investment, and our whole thing was The first thing we did was like crafted achievements, leaderboard, like featured achievements, featured cards. It was like very focused on the user profile. And then the first thing we did with the capital we had was we bought 100,000 ungraded cards for 4 cents a piece on average, quite literally bulk. And then we went around to communities and just as like kind of a goodwill airdrop, wanted to give out like tokenized Pokemon cards to everyone for free. Obviously, not VC funded or have like this massive amount of capital to give away. So it resulted in ungraded cards, which were kind of the first things we tokenized. And people loved it. Like we were giving them out to top Solana and Ethereum NFT projects because the communities are so strong there. And most of the people didn't even care for Pokemon. But I mean, I think getting an airdrop relative to like a lot of, I don't know, like vaporware meme coins and seeing like a trading card in your Phantom wallet was a lot cooler to people than most of like the spam that people would get around that time. And then we had this like economy booming on our marketplace where people were like selling ungraded trading cards for like 10x of value because they thought the provenance of like the first tokenized versions of them made them more valuable. And yeah, it was really cool to see that unfold. And then from there, we started accruing revenue from the gotcha and packs, which is quite popular on pretty much every platform you see now. And we reinvested all revenue into just acquiring graded cards. Started getting cards for like a $25 pack, and then as packs made more revenue, would get cards for a $50 pack, and then a $100 pack, and then all the way up to $1,000 packs. And yeah, that's pretty much where we are now. We're pretty like one of the main use cases between all these RWA platforms is the gotchas and packs. For us as well, it's like a main factor of volume and revenue, but we've been working on some cool things. It's not really our focus. Like we understand why people like it, but we think there's a lot cooler applications and use cases. So yeah, we can dive into the future in a bit as well.
Great, but before we do it, let's maybe take a step back. You explained RWAs, the tokenizing of cards, but maybe walk us first through someone who's never been on Phygitals. How does it work? Where are the cards stored? Can they redeem that? What are they buying? What is the whole process that's happening in the background so that people can understand how Phygitals as a platform works before we can get into the other things that you're also working on?
Awesome, yeah. So the one-liner pretty much is we're a marketplace for trading cards primarily right now, and also a custodian. So the whole use case with a platform like Phygitals is you can send in your cards to a centralized vault, and when you send in your cards, you get a digital representation of it, which is tokenized on the blockchain. And from there, that represents the ownership of your physical card. And the whole benefit of that is you can transact this card a lot easier than if you had the physical counterpart, as the custody can move instantaneously worldwide. So you can buy, sell, trade, keep, and whoever has the digital representation or the tokenized twin can redeem it for the physical at any point in time. So for us, we use industry leaders for our vaulting partners. When we launched in February of last year, and throughout that entire year, we had to acquire cards on Fanatics, PSA Vault, and Alt. They're like the 3 industry leaders of trading cards. If you're in trading cards, you know these platforms one way or the other. And late last year, we actually wanted to centralize all these cards in different vaults into one place. So like our logistics and shipping and everything was more streamlined. And we kind of came to the conclusion that like our whole take on this is kind of unifying liquidity among all these vaults. So when you're buying a card on Phygitals, it's custodied by one of 3 of those partners at an industry leading vault. And we kind of like that approach, and we've built really good relationships with each of these companies rather than go the route of building our own vault, because I think that's an entire business on its own that we're just not really interested in getting. We're more on the consumer front.
Gotcha. Yeah, that makes a ton of sense. And what you also did throughout the last year is you did extend way beyond Pokemon cards. You did One Piece, basketball, football. I think I've even seen a $25 Yu-Gi-Oh pack on Phygitals right now. What's driving that expansion? What are you focusing on when it comes to expansion? But also at the same time, it's Pokemon's like 30th birthday at the end of February this year. So is Pokemon still the main revenue driver? What is the second biggest on Phygitals right now, and how are you thinking about basically balancing the interest in Pokemon, but also the expansion into like other verticals or collectibles?
Yeah, that's a good question. I think Pokemon is that staple in trading cards, and it was the first and only TCG we started out with because at first, instead of doing like many things at once, we just wanted to do one thing really well, and that was Pokemon. So that was our sole focus: is how do we make like the entire Pokemon experience better than anyone. Um, and then obviously there's cycles with these things, and you know there's lots of collectors who don't collect Pokemon, so we started expanding into the other TCGs. I mean, the sports trading card market is insane, which at the time we weren't tapped into. So yeah, we started using the packs as a way to accrue revenue to expand into the other TCGs. So we pretty much have every TCG aside from a few nicher ones like Riftbound and Star Wars and stuff like that. But all the larger TCGs we currently vault and have gamified mechanics for. And for us, Pokemon was always the main driver of volume activity, except for the last, like, I'd say 2 months now. I think One Piece is absolutely, like, it's, in terms, for us, it's destroying our volume and activity over Pokemon at the moment, which is pretty surprising. I think with the anniversary coming up, it'll balance out again. But I think you have a mix of, you know, people who collect and people who invest, and the market is there's a big market segment for people who invest, and One Piece is kind of where all the action's happening right now. So yeah.
Very, very interesting. One of the things we have always said as a media company is that a media company that monitors the markets is that we get awesome data on the back end that we feel increasingly can be predictive of where the market is going next. For example, when our DMs start blowing up with like outrageous sponsorship opportunities, it means the market's getting hot, for example. Like in your market that you're specialized in, which is the Pokemon market, what are the data points that you guys get to see behind the scenes that really give you a great feel of when things are cooling down, when things are accelerating, and what are the signs you're reading at the moment for where things are heading?
Yeah, that's a good question. Yeah, it's a good point too. I think me personally, I've been finding the data more interesting because we never really, like, I never really dug deep, like as deep as I could have into the trend and analytics that, you know, we kind of see from our platform. And the two things that we see is One Piece for sure. Like I was mentioning with the gotcha pack volume. I think our volume correlates very well with even what you see on like social media with how hyped One Piece is. And like some of the inventory a few months ago that if we just held it and like didn't distribute it through our platform, we would have been up tremendously. And you probably see some figures like we were talking about, like some of the cards they had, like the serialized Luffy, and yeah, the returns on them is quite insane in a short period of time for like somewhat of a theoretical liquid asset. Because the market is still pretty fragmented, right? And then two is like sealed products. So like, you know, the booster boxes and ETBs and all that. That market is always hot. I think there's like our redemption rate for those kind of products is very high. I think it's just there's an investment perspective, or if people want it in person to actually rip it open, like those are much more hot products than a card. So yeah, those two.
Gotcha. That is super interesting. And maybe building up on that, you've done a ton of volume. Dune dashboard that I looked at showed more than 60 million gacha spent. You've done probably hundreds of thousands of transactions, tokenized 10,000s of cards. And the way that it also works is like I can rip packs, and if I don't want the cards, I can sell them back to you at, what is it, 85% of fair market value, 90%, something like that. But you're also then building a bigger and bigger inventory. So you also need to monitor market prices. Do you actually need to hedge your like Pokemon and cards exposure that you have as Phygitals, or how are you thinking about these market movements when it comes to the bigger and bigger inventory that you're holding?
Yeah, that's we monitor we monitor our overhead very closely, so we try not to have too much surplus. And based on like we have alerts based on which packs are going lower, and kind of are forefronting like supply for those packs. So we kind of foresaw like One Piece picking up just because of how hot the Pokemon market was, and people usually rotate between these things. So we were pre-buying that for a while, and then there's kind of an issue now of when things are hot, like you know, you start have to overpaying for assets, and if things cool down, then you're kind of stuck with theoretically illiquid inventory. So yeah, we monitor that pretty closely. We try not to like stress out our supply too much based on like our relative demand. And what's pretty cool is I think we have a really interesting like acquisition method where, so yeah, you can open a pack, and the whole kind of transformative use case was you get liquidity on the instantly, which is 85%, and in some cases 90. And then we have a perpetual offer, which is 70%, that we like have a dynamic fair market value range. So if we know that we need One Piece and Pokemon cards, we put like a perpetual offer on every single card on our platform and other platforms that's offered on chain, and people can kind of sell into it at any point. So there's like a floor, and that's usually at 70%. Sometimes it goes higher if we need more. Sometimes it goes lower if we don't. And then you're on our page before we started introducing loans.
Exactly what I wanted to ask about. Yeah, maybe
Yeah.
explain this pawn feature. How is it working? What are the APIs? What are the restrictions that I would really like to hear more about?
Yeah, this is in beta testing right now. So the whole use case of this is we want anyone to be able to provide liquidity and be a lender, and we kind of want to democratize loans for alternative assets like trading cards. So here you can pretty much you can pawn your cards for 1 week or 1 month, and you can get up to 50% of the fair market value based on alt pricing data, who's like the leader. And our goal is to let anyone, at least sometime in this year, is to let anyone be a lender. So we kind of want to democratize like the liquidity of trading cards is like one of our kind of top goals right now for this year. Because we think there's pretty much a liquidity problem that can be solved in a lot of different ways. And yeah, this is one of them. And we're seeing like really good reception and stats off of it. So yeah, I think in the next few months, like this whole aspect of the platform will be pushed a lot harder once we kind of nail out all the kinks of it.
Where do you expect like the fair market APY to land land for the borrowing and lending of cards?
Where do we get the fair market value?
No, not the fair market value, but the APY, like the lending rates. Where do you think that they will be once this is decentralized and open for anyone to be a lender?
That's a good question. I guess it depends on how much we act as how much restrictions we put on it, or whether it's like we just let it be fully competitive and let people kind of figure out the rates themselves, or if we kind of create a floor so it doesn't diminish too much. Yeah, probably don't have enough data to figure that out, but I think once it like fully opens up, we'll start seeing like what kind of rates people are offering without kind of racing to the bottom between each other.
I'd be super interested in where the number shakes out. My experience in lending on NFTs specifically, and only on the premium stuff, because realistically with NFTs, the lower stuff doesn't really have a lending market. I often say the way to know if your NFT is really worth the thing that you say that it is if someone's going to lend 50, 60, 70% loan to value against it. That's how you know that your thing is worth whatever price is alleged. And in the CryptoPunk market in general, it's often gone between 10 to 15% APY, but then it's also been far more personalizable. So people can say like, I want this amount, I'm looking for this amount. There's also refinancing available in that market. So if a lender wants to come in and say, I'll actually do your 50 grand, but you're paying 15% at the moment, I'll be willing to give it to you at 13%. You can like do auto refinancing. So in my experience, I don't know if it will necessarily translate, but I think in principle, it should work the same, because if something is a premium asset and you believe in its price, then 50% to 70% loan to value, 10 to 15%, because we're in a bit of a riskier market. That's where it has in the past. So I'd be very curious to see where you guys shake out with that. A couple more questions, Jake, before we close out. One, just thinking to the future, and then one maybe for people who are looking to enter this market. Is there anything else you'd like to share about the direction that you're going? You've got this lending product in beta. Like, what else can we expect from the Pokemon and collectibles market and Phygitals in the next few months?
Yeah, for us this year, I think last year we were kind of getting our foundation set. And then this year is more just about, for us, distribution and kind of like unifying all the different pain points of the collectibles market. I think you have like hundreds like brick and mortar and Shopify stores for collectibles, and even tens of thousands, if not upwards of 100,000 trading card focused. And then you have a lot of RWA slash blockchain native collectible stores coming out, and then you got the giants like eBay and Fanatics. And to us, there's like all these fragmented pieces, and we kind of want to be the ones who kind of unify it all in one place and be an aggregator and liquidity layer on top. So that's what we'll be focusing on, and kind of democratizing the infrastructure for what we're doing for everyone. Yeah, that's really our goal and our focus. And I think like in the next month, we have some really big Web2 Pokemon stores and shops starting to launch like their own gacha and packs on Shopify, and we've been integrating there. And yeah, that's mostly what's like exciting us right now.
Very exciting. And final question before we close out, for the people listening in who are maybe don't have exposure to the Pokemon market, but have seen that it clearly is something that holds value. It's kind of, it is quite investable, but also for maybe the more sophisticated participants, what's the best way to take either their first steps or their next steps in 2026, in your view?
Well, I'll premise on saying this isn't financial advice, but
Of course,
maybe you could just brute prompt Claude on what he would suggest. I think he has good takes right now. That's a good question. I mean, the market is scary because I think like the amount, it's just odd because there's a physical counterpart, so data can lag behind. And if you're going from a pure investment focus, it's kind of like anything. You should invest what you're willing to lose. Like right now, One Piece is really hot. I think there's tons of opportunity there just because it's the world's biggest. I mean, it's one of the world's most popular animes. Their player base for the trading card game is growing, which means you have people buying the cards for the trading card game, which is a very low supply. Like the total population count on PSA for One Piece for all of One Piece cards is lower than like a single birthday Pikachu card pop count. So there's big supply constraints there, which usually can correlate with, you know, better upside for pricing. But yeah, I mean, buy what you love what you collect, and I think if you want to really dig into it, there's good platforms like Alt who has kind of very good centralized pricing data, and you can kind of watch trend lines. I think Pokemon 30th anniversary and all the attention Logan Paul is bringing is pretty beneficial to that whole ecosystem. So yeah, I mean, premise on that.
Love it. Super helpful. I think maybe we need to add some of those data points to our Telegram legendary, because I think it'll be helpful data points for our community to keep a track of. That's awesome, Jake. Thanks so much for joining us. I thought it was really, really helpful. Is there anything else you'd like to share just as I go through your socials? If you want to keep up with Jake and the Phygitals journey, it's at Colada Codes on Twitter and at Phygitals for the company account. Anything else you'd like to share, Jake, before we close off for today?
No, I mean, thank you so much for having me. And I want to take no credit for the success of Phygitals. There's an awesome team who I didn't talk about enough and who kind of keeps all the gears going. I just get to sit here and chat as part of my role. So I'm very grateful for everyone who's contributed on our team side, lots of relentless hours, and then the entire community, and then awesome builders like yourself who showcase and spotlight people building the ecosystem. So yeah, thank you so much for having me, and it's been a pleasure.
Great to have you, man. Thanks so much. That's it for today, guys. Thanks so much for joining us. Thanks to Jake for joining us as well. Just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time, live on X Video, YouTube, and you can catch us on Apple and Spotify as well. We'll be back same time, same place tomorrow. Have a wonderful day. Take care. We'll see you tomorrow. Bye-bye.